So in this video, I'd like to explain what is the difference between a mutual fund and ETF if you are investing. So what does it mean by that? Suppose you are doing SIP, systematic investment program, or in North America, it's called dollar cost average. What does it mean? Like each month you are investing a certain amount of money, either the mutual fund and ETF. What will be the impact based on its fees basically, and what will happen in your 30 years term or 20 years term, and how it will be reveal how much money you get out of your investment. So what is the main difference between a mutual fund and ETF is the fees. There are multiple fees out there. So what I did, I asked ChatGPT, what are the fees out there? Let's see the results. So here I write it, what are the fees involved in mutual fund investment? ChatGPT give it to me. It says there are management expense ratio are there, which is basically the biggest fee. It's covered fund manager salaries, research, administration, marketing, which is could be 2%, or maybe more, maybe less. It depends on the fund. So if you invest $10,000, then annual return is 8%. Suppose that fund is doing 8% and the fees is 2%. So you don't actually receive 8%. You actually receive 6%. Because why? The 2% is goes to the management fees, the fund manager salary, research, administration, and marketing, and any other fees they are dealing with, because you are not dealing with somebody else doing it. Management fees are there. So the management fees could be a little bit different about that, those who are managing your portfolio and investment there. Sometimes the trading costs are there, typically 0.05 to 50%. It's like a brokerage commission, buying, selling security commission, like that kind of thing. Sales charges are there, very less, but these could be the charges involved based on the mutual fund you are looking for. Okay. um, and advisor fees too. So in typical, if you are in Canada and also across the globe, there are multiple fees associated with the mutual fund. Typically, it could be vary between 1.5 to 2.5, and then active mutual fund maybe 1% to 3%, because they are actively managing the funds. Index mutual fund is, you can see, 0.3 to 1%, and the ETF is basically exchange traded fund, which is very low. It could be like 0.03% to 75.75% actually. So the scenario, suppose you invest $10,000 for 25 years, right? If you are doing an ETF, if you have a 8% return on the ETF, you will be making around 684K. Where if you are putting in a mutual fund where you have 8% return or 2% management fees, you will be getting 429,000. Okay, so there's a difference between these 2% fees. If you think at the lower level when you're investing, that nothing, but when it's a longer time period, you can lose 250K in there. Anyway, so what I did is basically I built an Excel sheet again. Normally, I want to see what is happening through hands-on, and then I want to show you how and where the difference comes there. Okay, so also I'll share these Excel sheet with you guys for your own experimental purposes. So here's the calculator. Okay, so mutual fund versus ETF fees impact calculator. So let's look at here. Initial investment is 10,000. Okay, all are in dollar values. Annual contribution, so like each year you are contributing 5,000, you can divide it by 12, so you can do it in each month, you can divide it by 26, so you can do it like bi-weekly. How it is, it's up to you. So starting amount is 10,000, let's put it there. Amount invested every year is 5,000. Total, how long you are going for, like let's say 30 years. Your return each year on average is 8%. Let's assume that. And your mutual fund fees is 2%, and where ETF fees is actually 0.2%. Okay, so what will happen from a mutual fund? Actually, your fund did 8%, but as you are paying 2% to these fund manager, so you are getting actually 6% out of it. Nothing but this is the difference between 8 to 2, 6%. So that's your basically the return, nothing but gross return minus mutual fund return. So that is return you are getting actually, where the ETF return is just the difference between the investment expected gross return minus ETF management expense return. And that is basically you have 7.8% the value. So you are getting 1.8% more if you are going for ETF. Again, so here is more details. So suppose like at the year of 0, you spend you save 10,000, and then each month, the second year, you get 10,000, and then each month, each year actually you're contributing 5,000 more. and then you have a 6% of your return instead of 8%. So how it grows? So it goes through these value. So end of 30 years, you'll be getting 476K, where the same thing, if you are doing in an ETF, you will be getting end of 30 years is 683K. So what actually, if I plot this thing, how it shows that, what actually shows you is smaller when you have a smaller amount and the time period is shorter, is not much of a difference. You can see the both line. One is an orange line and one is a blue line. The blue line is basically the ETF and the orange line in mutual fund. But for a longer time period, so suppose like after 10 years, these getting bigger. The difference getting is bigger and bigger. When you have a 30 years, you can see the difference is much bigger. Why? That 2% of the management fees. So if I build a kind of a dashboard here, if you see what is happening as a number wise, you can see that the mutual fund is giving you again 476,000, where ETF will give you 683,000, and the difference is, you can see, 1.8%, which is around 200K, and that's the difference here. So I put also instruction also here, how to use this workbook. I hope you understand where the difference you'll be getting if you invest in ETF versus mutual fund, and you can use this one for your own experiment. Hope you get a value from this. Thank you.